Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for February 10th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the current session. I'll make this quick here because we do have Janet Yellen, Fed Chair, coming up at 9 a.m. Central. Also, she'll be up Thursday, 9 a.m. Central, so 2 days of testimony here for Janet Yellen. So the markets are going to kind of be in a holding pattern here, and if anything interesting comes out of her testimony, you're likely going to see movement as a result of that testimony. So we're going to watch to see how this thing plays out. Overall, the ES is kind of pulling back after the hold the previous session. But what you're seeing right here is a push into 1865, the previous week's low, and also that 1875, the previous week's close. So there's kind of a zone right there where bears are looking to keep defended for a shot at seeing a continuation to the downside, or at least a retest of this key zone down here between 1804 and 1811. We could see any push beyond the previous close could lead to a squeeze right back into 1921. So right now the battle is being fought right here between 65 and 75, and specifically at 71, which is the inside 25% key level. So right now a defense at this zone could potentially lead to weakness ahead. Now if we drop into the intraday time frame, you can see that there has been a very tightly formed range here, and I was talking about this range the previous session, noting how much energy is being built up within this range. So once we do see true expansion, obviously this was not true expansion, we could see some significant movement as a result of a breakout from this range. So right now any failed movement above that zone could lead to a move back to value and perhaps into 1830. We have had a kind of a mild pattern of higher highs, a little bit of this kind of action. So easily coming back into 1839 could be the course of action early in the day. Now, if we take a look at crude oil here, this is the daily time frame of crude oil. Obviously, we're coming very close to that 2756 key level, which is the bottom of the key range there. The defense off of 3343, the midpoint of the key range, was evident. We saw it go offered here. We saw the retest here, and that retest led us to believe that we could be looking at a retest of these lows with a shot at further downside expansion, and that's right where we are right now. So any failure to hold 2756 opens up a clear path to 2463 and 2169. Obviously, if we break down through 2756, there is a 100% expansion target, much lower at 1582, but again, we'll cross that bridge when we get to it. So right now we're just seeing how this thing plays, because if price pushes below 2756 and there's a rejection and price pops back above it, we could be headed right back to 3343 very quickly. So it's all going to see how this thing plays out at 2756. Overall, very tightly coiled range in overnight trading for crude oil. Only 88 ticks of range. It's been averaging 243 points, $2.43 of points per day. So it's only trading 36% of average daily range right now heading into RTH, so that's very, very tiny. If we look at the intraday time frame, you can kind of see that very, very tiny action here. But overall, this pullback into 2866 has been an area to defend, and that has currently been the case right now. You can see right here, this 2866 is the zone to defend for bears for a shot lower. Bulls are trying to keep price above this 2775 for a rotation higher. Failure to hold that level opens up a quick move into 2703 and 2691, the primary bear target. One thing to keep in mind is that we did have that major key range the previous session. This key range right here 2 days ago helped us identify the target right on the money, 2776. Perfect. We're coming up to that level now, so failure to hold that level could open up additional targets to the downside with regards to this range. So if we brought up something like a 200% of ADR here, this is what we'll be seeing as a move down into this target 2686, which goes right in line with our primary bear target for the day. So failure to hold this level opens up a quick push downward. Above 2866 squeezes right back to prior 5-day VPOC, somewhere between 2957 and that 2983. Looking at the gold futures contract here, big time squeeze to the upside. We talked about 1192s being the key level to watch. Failure to hold above 92s could open up a pullback. And right now you can see we're just below that zone now. We also have the previous week's high at 1175 in an uptrending market. Pulling back to that level could offer a defense opportunity for a squeeze higher. Failure to hold above 75 opens up a retest of the close of the previous week, which is 1157.70. Looking at the intraday time frame for gold, we're seeing a very tightly coiled range here. Again, a breakout from this range will be significant. So we're talking about 1192 as the key level, right? But we also have 1180 as kind of the LVN here. So a lot of chop back and forth in this zone that's building energy. A breakout in either direction sparks massive movement. Above 1200 could spark big time movement to the upside, but what we're seeing is kind of a rounded pattern here. And if price fails to hold above 1180, that is a quick drop back into 1155. Okay, taking a look at the NQ now. The NQ holding off the bottom of the August range. 38.93 was the key range low of August, and we see price came into it and bounced a little bit. Now this bounce is putting us right to 4,000 evens right now from below. And anytime you're pushing lower, when you bounce back up, you're usually going to see a defense at some point for another round of weakness. That's the primary objective here, while bulls are looking to create higher lows and squeeze. So right now, 40.25 going to be very important. Defending that zone, kind of an LVN there, or HVN rather. Defending that zone would suggest a continuation lower above it, squeezes all the way back into the meat of this previous range. So we'll see how that plays out. Looking at the intraday time frame for the NQ, you can see that basically prices have been developing within a very tightly coiled range down here for the last couple of sessions. Again, in advance of that Janet Yellen testimony, we do have a top of the range, bottom of the range here, a lot of development going on. That's a lot of energy, I'm telling you. When we see expansion from this range, all of this energy will be released, and we're going to see a move similar to this that we saw before, if not more. So this could be huge. Again, watch this 40.25. I think that's going to be a key level along with the previous week's close. Bears want to defend this level for a return to 39.40 and perhaps back to recent lows. Above 40.25, squeezes back into 41.30 half and perhaps all the way into the meat of the recent range, which is about 41.45. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.